Advanced Micro Devices Inc., commonly known as AMD, is currently trading at $278.39 as of Monday, April 20, 2026. The market is currently closed for the regular session, but looking at the most recent movement, the stock has shown a slight uptick of 0.05% in the last full day of trading. While that percentage looks like a rounding error at first glance, the real story is in the volatility we saw within the session itself, with the stock swinging between a low of 274.14 and a high of 281.05. This narrow closing gain masks the heavy lifting happening beneath the surface, as AMD is currently fighting to maintain its ground near all-time highs, while the broader semiconductor sector experiences a massive tug-of-war between aggressive retail buying and cautious institutional profit-taking. The insight that many are missing right now is that AMD is no longer just a sympathy play for other semiconductor giants. While most investors are focused on the raw hardware sales, the expectation is that AMD is simply chasing the leader in the GPU space. The reality, however, is that AMD has quietly moved into a position where it is capturing the overflow demand from hyperscalers who are tired of being locked into a single ecosystem. We are seeing a shift where massive cloud providers are diversifying their chips not just for cost, but for supply chain security. This has created a floor for the stock that didn't exist 2 years ago. Even if the broader market feels top-heavy, AMD's specific demand for its Instinct MI400 series is outpacing its ability to ship, which is a problem any CEO would love to have. The general belief about AMD stock is that it is perpetually the runner-up, a high beta play that will eventually revert to the mean once the AI hype settles. You hear it on every financial news outlet, the idea that the valuation is stretched and that the company can't possibly maintain this base. But I want to challenge that. If you look at the recent institutional activity on platforms like Fidelity or through Interactive Brokers trading data, you see a different picture. We aren't seeing a mass exodus, we are seeing a rotation. Large-scale funds are moving from pure-play software back into hardware because they realize the physical infrastructure of the future is still being built. The common ground is that we all know the sector is hot, but the contrarian take is that the peak people keep calling for is likely just a new baseline. Looking at the daily swings in trading volumes, it is clear that AMD is a favorite for those using the Robinhood app or SoFi Invest for active trading. The volume of 35.52 million shares in the last session shows that liquidity remains incredibly high, which is essential for a stock at this price point. We saw a massive reaction to recent rumors regarding a partnership extension with Meta, which sent the stock surging 7.8% earlier in the week before consolidating at this 278 level. This consolidation is actually healthy. When a stock hits a record high like 281 and then holds steady instead of crashing back down, it tells you that the buyers are supporting the new price level. They aren't just speculators, they're long-term holders building positions in their individual brokerage accounts. For those who use online investing tools or seek investment help to manage their portfolios, the current macroeconomic pressures cannot be ignored. We are seeing a transition in central bank policy where interest rates are staying at a higher for longer plateau. Normally, this would crush high-growth tech stocks, but AMD is defying that logic because its earnings growth is actually outrunning the cost of capital. In the last earnings report, data center revenue was a record $5.4 billion, up 39% year over year. That is not a company struggling with high interest rates. That is a company that has found a vein of demand so rich that it effectively acts as its own economy. If you look at Schwab Intelligent Portfolios or similar robo-advisors, you will notice that their algorithms are increasingly allocating towards these high-efficiency semiconductor names because the cash flow metrics are starting to look more like value stocks than speculative tech. Now, let's look at what this company actually does for the few who might not know. AMD is a global semiconductor company that started decades ago as a distant second to Intel in the CPU market. They design high-performance processors and graphics cards. Their business model revolves around being fabless, meaning they design the chips but outsource the actual manufacturing to companies like TSMC. This allows them to stay lean and focus entirely on the architecture. Over the last few years, they moved from making chips for your home PC to powering the largest data centers on the planet. Their Ryzen CPUs and Radeon GPUs are staples in the gaming world, but their EPYC server chips are the real engine of the current stock price. If you go back to their older reports, you can see the trajectory. In 2024 and 2025, they were laying the groundwork for the MI300 and MI400 series. At the time, the market was skeptical. People thought Nvidia had an unbreakable lead, but AMD's focus on open source software and flexible architecture began to win over developers who didn't want to be trapped in a proprietary walled garden. This brings us to the present day, where their client and gaming segments are also seeing record numbers, with gaming revenue hitting $843 million in the most recent quarter. They are hitting on all cylinders, which is why you see so much discussion on investing sites about whether it's too late to get in. Comment below how many shares of AMD stock you currently hold, or if you are waiting for a dip to the 250 level before buying. The future outlook for AMD is heavily tied to two major catalysts. First is the upcoming Q1 earnings report scheduled for May 5th. The market is expecting revenue of around $9.8 billion. If they beat that, and more importantly, raise their guidance for the second half of 2026, we could see the stock break past the 300 mark easily. The second catalyst is the rollout of the MI450 lineup. This is the product that could actually parity the top-tier offerings of their competitors. If the MI450 sees a rapid ramp-up in adoption by companies like AWS or Google, the revenue spike could be significant enough to justify even higher valuations. However, we have to talk about the risks. The reality is that export controls, particularly regarding shipments to China, remain a major headwind. AMD has already noted that they only expect $100 million in sales from certain chips to that region due to these constraints. If trade tensions escalate, that haircut on the top line could get deeper. Additionally, the competition is not standing still. While AMD is gaining ground, the capital expenditures required to keep pace in the AI race are astronomical. There is also the risk of AI fatigue among investors. If the massive investments being made by big tech companies don't start showing clear ROI in their own earnings, they might slow down their chip orders. When you look at this through the lens of expectation versus reality, the expectation was that 2026 would be a year of cooling off for the chip sector. The reality is that the demand for compute power is becoming a fundamental utility, similar to electricity or water. As long as that remains true, companies that provide the best engines for that compute power will remain at the top of the food chain. Whether you are using Fidelity ETFs to get broad exposure or a Robinhood account for individual brokerage trades, AMD is likely a name you have to have an opinion on. In summary, AMD is sitting at a critical juncture. The stock price of $278.39 reflects a market that is starting to believe in AMD's ability to not just participate in the AI market, but to lead segments of it. We have moved past the era of viewing this as a cyclical chipmaker and into an era where it is a core infrastructure provider for the digital world. The contrast between the cautious analysts who keep calling for a top and the reality of the record-breaking data center growth is what creates the opportunity here. Using tools like SoFi Active Investing or the Interactive Brokers platform allows you to see the real-time order flow, and right now that flow suggests that the big players are using every minor dip to add to their piles. They are looking past the daily noise and towards a 2027 and 2028 where AMD is even more integrated into the global economy. As you manage your self-investing strategy, keep a close eye on the 274 support level. As long as the stock stays above that, the bullish narrative remains intact. If it breaks below, we might see a more significant correction, but for now, the momentum is clearly with the bulls. This analysis shows that while the surface-level numbers look stable, the underlying tension is high. Investors are waiting for the next big confirmation of the AI growth story, and AMD is the primary vessel for that sentiment. The path forward will be defined by how well they execute on their new hardware launches, and whether they can continue to navigate the complex geopolitical landscape that governs the semiconductor world. Keep your eyes on the May 5th date, as that will be the moment where expectations and reality finally collide for the first half of the year. Through online investing, you have the power to react quickly, but the real gains in a name like those often come to those who can see the big picture through the fog of daily volatility. The depth of this company's portfolio, from space-grade chips to the world's fastest gaming processors, gives it a level of resilience that few of its peers can match. This is a business built on long-term architecture, and the stock is finally starting to reflect the true value of that foundation. As we close out this look at advanced micro devices, remember that the most important thing is to stay grounded in the data. Don't get caught up in the hype on social media, but don't ignore the very real technological shifts happening right in front of us. AMD is at the heart of those shifts, and whether you are a long-term holder in a Fidelity IRA or a day trader on the Robinhood ad, the next few months are going to be some of the most important in the company's history. The reality has consistently exceeded the market's expectations over the last year, and if that trend continues, the current price might one day look like a bargain. Summarizing the situation, we have a company with record revenues, expanding margins, and a product roadmap that is scaring its competitors. While risks like export controls and sector fatigue exist, the sheer momentum of the data center business provides a powerful cushion. The market will continue to toast these highs, and as an investor, your job is to determine if the foundation is strong enough to hold. Based on the current institutional activity and the technical support at recent lows, the market seems to be betting that it is. Stay sharp, watch the volume, and always be ready to adjust your strategy as the reality of the market evolves.